Hey traders, welcome to Top Tier Outlook. Happy Sunday, everybody. Hope you've had a good weekend, a relaxing one, got a little time away from the charts, ready to get back to it as we wrap up the month of February. Where have two-thirds of the first quarter gone? I'll tell you where they've gone. They've gone in an uptrend. That's what we're dealing with at the moment, and I'm writing up the Top Tier Outlook right now, and I started off this week's newsletter. So if you're a Sector Secrets Mastery subscriber, if you're a subscriber, of course, to the Top Tier Outlook, we'll get that out to you all tomorrow. But the first thing I started off with was mindset, and if we think about what those strong trends have been thus far this year, trends. When we think trends, gang, please think account growth. Right? Trends are the best, I dare I say easiest, but trends are the best, if not easiest way to grow an account, right? There have been a lot of very cool names out there doing lots of cool things, but trends are repeatable. And I don't mean trends that are, well, look, NVIDIA jumping is not a trend. Let's dive into this for a moment. If I take a look at December, January, February, this last little move in NVIDIA after the 10% pullback after the new highs, that's not really the trend. The trend has been in place since really the 11th of January. That's the trend. This is a resumption of, a continuation of, a gap up within the trend, right? And so if we think about what the most predictable behavior is in the financial space, it's an uptrend, specific to the uptrend. And if we think about where account growth is, it's not picking a top. It's not a home run trade. It's the consistency with which we can find a trend. It's the consistency with which we can wait for the pullback, and the consistency with which we can buy the dip and trust that more often than not, probabilistically, trends will resume, not reverse. That's it. You want to think about account growth? That is it, right? That is it. So then you say, okay, Rog, well then how do we do it? Every trader is just one setup away from trend following. And the setup, it reminds me of, I don't know how many of you used to, back in the day, there was a bodybuilder named Dorian Yates. I think he's got a podcast and all these things now. And I watched some interview with him. He's a very interesting character. So there's a bodybuilder named Dorian Yates. And he would say, I just go, to failure. He would just make the workout sound really easy. And, he did that on purpose because his warm up would kill most of us, right? The real growth that he got was in pre-exhausting the muscle, and he'd lift really heavy to failure. And then he just go rest, right? Okay, why do I bring that up? Rog, you're really gonna liken trading to bodybuilding? Yeah. What is the preparation for that one set? Up, right? What is that preparation for the one thing we're looking to do? Can I find a trend? Can I focus on the relative outperformers? And then can I wait for the pullback, right? So it sounds really easy, buy the dip, right? And that's like Dorian Yates saying, one set to failure. But what we don't know are all the things that came before that. I'm watching the Apple TV has this thing on the dynasty right now, the Patriots. I was raised a Patriots fan. It's really it's pretty interesting. I have quit football. I have quit football, but this documentary is really good about mindset. How much preparation? People talk about Brady. How much preparation did the guy have before a game? Ridiculous amounts of it. Same with Belichick, right? But anyway, what are the things that come before what seemingly is that one simple thing? Buy the dip is a meme because it doesn't really tell you the whole story. How are we finding the symbols to buy the dip of? Anyways, I know I'm going off on a little bit of a tangent there, but when I see traders trying to do one of two things in this environment that just make me sad, is one of the things that I'm addressing in the Top Tier Outlook this week is the absolutely inane notion that right now we should all be waiting for this catastrophic seasonal pullback. And The reason it saddens me is because it's a basic misunderstanding of what seasonals actually are and how they're calculated. The most bearish seasonal between February and April is the one that has a 5-year look back. So here we are in 2024. What's happened the previous 5 years between February and April to make traders think, oh my gosh, we could drop? Okay. 2019 Q1, which would be in that 5-year look back, and 2020 Q1, which would also be in that 5-year look back. So of the 5 years, 2 of them had the steepest sell-offs in the history of humans, pretty much, factored in. Is that really a seasonal that would override the election bullish cycle that we typically have? And the fact that the Federal Reserve is in the midst of a dovish pivot. Right now, that dovish pivot is mostly messaging. It's mostly words, but those words will eventually, the words preempt the action. When the Federal Reserve is doing their job, they projected what they are going to do so well. The markets have already begun. Treasuries, currencies, indices have already begun to make their moves, right? We see what home builders are doing in anticipation of what? Lower mortgage rates, right? All these things are going to move before the rates are cut. We always anticipate, right? Everything's forward looking. So if we start thinking about these things and how they're going to influence the trends that we have, one thing I will say, a lot of you might say, Rog, isn't tech toppy? Okay. It's a really cool way to take advantage of tech and not necessarily only tech, because right now the uptrend in NASDAQ is communication, XLC. So think Meta, Google, and semiconductors. You're thinking that's kind of a one-trick pony. Agreed. Meta, boom, there goes XLC. Nvidia, boom. Nvidia, there goes SMH. So Nvidia and Meta have created that outsized move in a high concentration weighted sector. All right, if you're freaking out about that, let's do something we've been doing in Top Tier Outlook and also in the Sector Secrets Mastery around account growth. What is that? Again, account growth is that nice, smooth, boring P&L. Right? What are those trades that we put on managing risk, not home runs, because that creates all this kind of stuff, right? We don't want to get seasick. So if you're looking for some smoothness without being as vulnerable to sort of the one-dimensional NASDAQ index, take a look at the S&P. There's a reason the S&P is in fuego right now, because of course we have the tech powering S&P. The Magnificent Seven are in the NASDAQ and the S&P index. But S&P has the added benefit of benefiting from financials and healthcare. And these are things that are going to disproportionately benefit the S&P and the Dow, right? I won't call the Dow a downtrend. It just isn't the uptrend of the caliber of the NASDAQ and the S&P. Do I want to short the Dow? I don't. But there are really great places to look at within the Dow. So if you haven't been thinking about the equity markets in this way. And sorry, I forgot the clock today. Let's get this clock on here. I like the clock there too. There we go. If you haven't been thinking about the way in which the S&P, why is it outperforming? The way in which the NASDAQ might be vulnerable to some tech profit taking. Why XLF and XLV and XLI are great sectors to look at that don't necessarily mean we have to care about what's going on with Nvidia, Meta, Microsoft, etc. Right? So these are things we can do when we are kind of like I mentioned before, doing all the homework before that one set. So we're all really just one setup away, which is only telling just the very end of the story. What are the things that preempt that one setup? Find the trends, find the relative outperformers, and then wait for the dip. Yes? All right. With that being said, let's get into it. As always, let's grab some questions. And Yi, one of our members in our Sector Secrets Mastery, weekend was good. ZB needs to find support above one. Yeah, so let's talk a little bit about what are some of the other clues that might be out there that might be trackable as we wait for the Federal Reserve to pivot. Getting above 119, and really at this point, I would say probably 119.20, if not 120, is going to be important because that's the 200. That's the 200 propulsion, our 8 and our 200 period exponential moving average is crossing, leaving behind this equator, as I like to call it. We're still in the bearish hemisphere, right? So I do want to find proof that yields are saying, yep, we trust that the Federal Reserve is going to act in time to not do any prolonged damage to the economy with a too high for too long rate stance. And then that's going to also, that will send bonds, bond yields lower, or TLT and ZB higher. And the other thing is that bonds are ready then to say, you know what, rate cuts are coming. We're expecting them in June. And we should start to see that move if those two things can happen. So it's not just 119 support, but I really like to see 119.20, 120 broken to the upside. That's really what I would look for there. Yeah, and we're going to continue to look for that. Yeah, for sure. As far as TLT, it's a little soon for me because until I have it set up on ZB, I'm not super thrilled about TLT. Right? TLT is going to be the choose my own adventure choice once I like what's happening on the ZB. So let's see if ZB hits resistance. Yeah, I'm not ready to buy yet. It's just too soon. It's just a little too soon for me. Yeah, so let's put that in our back pocket. I like to mention things in Top Tier Outlook a good bit before we're going to do anything, because once we take those ideas, we marinate on them a week or two, and then when the setups are going to come and we put them out there in Sector Secrets Mastery, at that point we've had some time to acquaint ourselves with what we're looking at and why. Just too soon, I think. Just a little too soon. I don't want to short it though. I don't want to short it. All right. Let's see. Next up is, oh, yes, good reminder. If you want to, kind of the trades that Yi's talking about. When do we want to get into bonds? When do we want to play TLT? How are we growing our accounts right now? Why do I like financials and industrials? And, why are we playing the kind of symbols we're playing like Disney? Do we have to trade the things that everybody else is talking about? We absolutely do not. In fact, we've grown our accounts just fine without playing the actual craziness and the jump and the binary nature of earnings. We've been growing our accounts just fine without a single trade in, super micro. Not once. I don't need that in my life. So I don't need that. I don't need a sort of the trade of Q1, right? I have GE. If people say, Rug, SMCI, I say GE, right? Folks say, oh, tech's doing whatever. I say XLF. Find the peaceful corners that aren't getting all the attention, that aren't jumping up to higher highs, and yet are yielding really great 2, 3x return trades, right? Boring. Boring also means organized, right? Boring sort of masquerades around as organized and risk control. Definitely things that we want to focus on. All right. So next up is, what do the dotted lines of the daily price movement range and the hourly price movement range signify? Sure. So there's a couple pieces of this indicator, and I know a lot of you are getting your hands on it for the first time because we have a specially curated group of hourly price movement ranges and daily price movement ranges available during our trial month over at the Sector Secrets Mastery. And just real basic, sure, it's really simple. When I'm looking at the hourly price movement ranges, and this would apply to the daily price movement ranges, of course, as well. We have our dotted lines there, okay? And then we have our resistance and support. Now, the resistance and the support account for sort of, if you want to look at it this way, the average to the high amount of price movement range. So again, the average to the high amount of price movement range. But what about the lowest amount? That is the dashed line. So if every 60 minutes there's a range, right, of price action, we call price movement range. There's a low end in terms of number of points, right? It's a number of points that stock, that futures contract, whatever, could travel. There's an average amount and there's a high amount. And that's exactly what we're trying to show here. So the average to the high amount is the gray or the gold zone, and the low, the least, if you will. If you want to consider it low, if you want to consider it as the least, it means the same thing. That is the dashed line. Now, the next question is, do we use that very often? I actually don't. I'd rather have something more exhaustive. And what typically is more exhaustive is the average to the high, right? If someone says, yeah, we have a rhythm, but this is the lowest amount of price we could move, is it exhaustive? Kinda. It's not going to be as exhaustive as the average or the high. And that's how those work, right? Whether they're the daily price movement range or the hourly price movement range, that is how they work. All right. Next up is, what are my thoughts on Japan? I haven't really paid much attention to Japan. I'll be straight up. If I take a look at EWJ, I haven't put a lot of, look, like a lot of indices, they're moving straight up. So whether it's EWJ, EWC, EWG, whether I'm looking at Nikkei or DAX, I would have to say I agree with you. EWJ has been moving higher. This is buy the dip. So what are my thoughts? Really simple. Trade what I see. What I see is an uptrend. In the context of the uptrend and being above the 200, buy the dip. I haven't played this symbol in a very, very long time. I probably should start looking at it again. What would be really nice is to have some daily price movement ranges here to complement the mean reversion of the 34 EMA wave, because I am certain that in that zone, we've probably got some daily price movement range volatility levels to support. And I'll tell you, Ahmad, thank you for the question. The liquidity is pretty darn good. So this might be something Bot and I will look at to add to the daily price movement ranges, because we're always looking for liquidity. We're always looking for good pricing. We're always looking for trends. And while there is a good core of daily price movement range symbols, we're always open to adding and removing certain ones if the liquidity drops off or if the quality of the trend and whatnot start to drop off. So this is definitely one to keep an eye on. Mean reversions are good. Definitely got to get the daily price movement ranges active on this one. So that might be something to look at. And nice liquidity on the options chain for sure. All right. Jack asks, BX, would BX be considered part of XLF? We don't have to guess. So what I would say, if you're looking at Blackstone BX, all you need to do is, and what we typically do in the room, Jack, is just go on over and take a look at the holdings that BX is a part of, right? That's the easiest way to do it. So you would basically do a reverse search of that stock and then, ask yourself, okay, where is Blackstone Group? Now, those are the Class A shares, right? Blackstone BLK is in XLF. So I think BX is simply the A shares, if I recall. Don't hold me to it, but I'm pretty sure that's the difference. So yeah, BLK. Wait, is that Blackstone or Black? I get all the Black whatever's confused. BlackRock, BLK is part of it. What's BX again? It's a Class A. Oh, BlackRock, Blackstone. No. I'm just thinking Black whatever. No. BLK is, sorry, I totally lost my brain went, it's a Black something. So no, I believe it's probably more a part of the IYF, but it's not a big name in the XLF. So sorry about the confusion. So I don't pay any attention to it because it just isn't weighted. I hardly even knew what it was. My apologies. But yeah, BLK, BlackRock, right? Okay. Now, would it be considered? We don't have to ask if it would be considered. Either it is a part of it, Jack, or it isn't. So it's very much a yes or no kind of thing. Yeah. All right. BLP asks, where can I find a video for members that explains all the indicators? BLP, we get this question a lot. All right. When you're in the room with us, it's like asking, and I mean this, it's like a traffic light. Do I need everything I've done is try to mimic the beauty of traveling and traffic lights. Okay, Rod, what the heck are you talking about? First, we start off with bodybuilding. Now we're going to start off with traffic lights. My indicators are really designed to not need a 17-page manual as to what to do with them, right? I think what most traders are wondering is, how do I trade with them, right? And that you get to see in the room day in and day out. But as far as what the indicators are, the explanation, each one of these indicators by design has basically a 1 or 2 sentence description of what it is. For example, the grab candles, green, red, and blue. Green is bullish, blue is neutral, red is bearish, right? Like I said, it's more of a definition. What I think a lot of traders are really asking underneath that is, what do we do with those? And that's what the room is all about. There's no manual that you're going to go read and go, oh, this is how I trade with these. That's what you learn in the mastery. So I get that question a lot. And I think part of the reason is traders are wondering, Rob, what do we do with them? Right. And that's what the mastery is. But as far as what they do, I mean, it's very simple. They're either giving you support or resistance. They're either overbought or oversold. They're either telling you bullish, bearish, or neutral. I mean, that's it. That's really it. Everything's automated to the point where every one of these indicators could tell you what they're doing in a sentence or two, right? The real gem of it isn't explaining the indicators, because that's pretty simple. Like I said, it's like explaining a traffic light. Well, what does red mean? Red means stop. What does yellow mean? Yellow means slow down, or in some people speed up, right? And green means go. That's the level to which the explanations, that's all that's necessary to understand them. But putting them all together, learning how to drive, that's a whole other thing. So 2 things. 1, be in the room. You'll see how we put all the tools together. 2, if you go into the learning center of the Sector Secrets Mastery dashboard, you will see a lot of explainers. And so basically, if you ever want to know what an indicator is, I mean, that's 1 or 2 sentences. What are grab candles telling you, Rog? Bullish, neutral, or bearish? Rog, what are the Darvas levels telling us? Support and resistance. Rog, what are the daily price movement ranges? Support and resistance based on time and volatility. You see what I mean? But what do we do with them? It's really within the confines of the structure, the confines of the trend, what the strategy is, right? So I hope that helps. Thanks for the question. And as always, gang, thank you everyone for being here for Top Tier Outlook. The Top Tier Outlook newsletter will go out tomorrow, and onward and upward. We got a couple trades on from last week in the mastery, so getting going after kind of a weird little. We were cautious around the FOMC meeting minutes. We were cautious around NVIDIA. We never got bearish because we don't hate our money, right? I addressed this seasonal nonsense that is going to bother us like a pebble in a shoe for the next couple of weeks. While we might get pullbacks, we have to know the difference between a retracement to a resumption and a reversal. I am not expecting the latter, gang, but if we focus on the relative outperformance, we should be right as rain. All right. As always, gang, thank you so much for being here. I'll see you tomorrow morning for Charts and Coffee. Enjoy the rest of your weekend. Be good to each other. I'll talk with you soon.